We are back here on another episode of the XRP podcast. Today, we're going to do something fun because we're going to drill in to where clarity is, why it matters for XRP, why it matters for crypto, and also take a look at some of the key things that are happening both with the CFTC, with the SEC. Now we've got the FDIC. I know you guys are going to learn a lot about those kind of things. And it's going to be fun because I'm going to have Zach Pandl coming on from Grayscale. He is an absolute rock star when it comes to analyzing these kind of things. So it'll be a good one. Today, I want to also just remind you guys that we are doing a big petition. The petition is pretty cool because it's getting into a lot of the detail around stablecoin yield. And one of the things that we've done with it is really just to kind of put the point out there of what the banks are asking, what the industry is asking. So we'll, of course, leave a link in the bio down below. So check that out. I think we are, I'm going to check and see where we are right now on it. Yeah, we're closing in on 7,000 signatures. So I'll show it to you guys real quick so you kind of know what it looks like. And if you follow me on X, we put this out 2 days ago. This, of course, now has almost 7,000 supporters. People are just signing up literally by the minute. A lot of people leaving comments, almost 500 people leaving comments. And of course, here's the issue really centered around the Genius Act and the Clarity Act and what this means around stablecoin yield and, of course, the protection of crypto in general. So we're going to get into all that good stuff going forward. So I want to take a minute, guys, and just invite you to join the Barron Market Edge private member group. You guys can do that by just clicking the link down in our description. This is your insider's edge to the AI and crypto money revolution, which is what we really focus on here on PBN. This is additional research that I do along with our team. We have a pretty significant team on our research around not only what guides our episodes, but a lot of that research gets built into more content that I drop here on the Barron Market Edge. We do market trends and sentiment analysis, which can be anything from tokens to all sorts of strategies. This, of course, will also guide you over to our Telegram group, and we give this as elite community access. You get bonus content over there, including tax guides, as well as different kinds of asset guides out there that we drop all the time. This is your 10-year vision in action. All you have to do, of course, is just hit that little subscribe button or join the community and get in on it. It's absolutely free. It doesn't cost you a thing, so check it out. Our guest today, and of course, that is Zach Pandl, who's coming in from Grayscale. Nice to see you, Zach.
Nice to see you, Paul. Great to be on again. Looking forward to this conversation.
Yeah. Sorry for the throat. I think I'm catching something. It's weird because I never get sick. So so hopefully I'll be able to make it through on this one today. Listen, let's get into a few points that I want to touch on. First of all, we did a video earlier this week that covered a lot of what was going on in the banking summit. And even I was surprised because our research team had to sit through, I don't know, about 15 hours of video just to understand what they were talking about. And many of the conversations, as well as the people that were on stage moderating, were alluding to a lot more than just stablecoin yield. And this kind of got our attention. We said, listen, we need, if the banking lobby is this active, we've got to get more active out there, grassroots. So we thought we're going to throw into the fight here with this petition. I was surprised within 24 hours, we had 5,000 people who had signed up on this. We're approaching 7,000 now. I imagine we're going to hit 10,000 by the weekend. And we're not really promoting it that much, but those of you who are watching this, we will leave a link down there. But when you look at the amount of pressure that the ABA is spending right now and putting into Congress in terms, they called it storming, DC.
Mhm.
First of all, do you think this is going to have a significant effect on the voting and also just getting to the vote in DC for clarity?
Well, Paul, it's great to see things like these petitions. Crypto, unlike the commercial bank industry, is a grassroots, bottom-up retail phenomenon all over the world. And so, if we want to get our voices heard, these types of petitions actually a great way to help move that. We don't have the same long-lasting relationships in Washington D.C. like the commercial bank industry. So this is exactly the right approach, I think, to try to change the conversation. Look, as you know, I'm incredibly enthusiastic about the ability of public blockchains and all the related technologies to transform the financial system. And therefore, it is not so surprising to see the banking industry starting to, put up blockers to try to resist competition that's coming from open source software, public blockchains running open source software that are doing many of the things that a commercial bank can do. And we're seeing crypto see wins in a variety of ways. The success of stable coins, the push towards tokenized assets, regulatory gains like OCC bank charters and Kraken's new Fed limited account. These types of things are signs that crypto is pushing in to the mainstream financial system, and the
Yeah.
incumbents that may be disrupted are pushing back. I think at some level, not all that surprising to see. It's a battle that we should expect to continue for years and years to come.
Well, and we are seeing very interesting timing around some of the things that are happening in DC. We have a lot of inside sources in DC that give us access to some of the staffers on Capitol Hill. So we have a good indicator of where, the kind of the heartbeat is right now around the Hill. And what we're hearing more and more is after that summit, which occurred, I think it was on Monday and part of Tuesday, all of a sudden we start to see this Thune pivot is what I'm calling it. It's kind of this the new April cliff comparison, especially if we don't get clarity going. But mainly, Senate Majority Leader John Thune, he of course has signaled that he's pushing very hard for the Save America Act. Then, of course, you have Trump out there saying, "Yeah, we're gonna get this through, and if we don't get this through, we're gonna basically step away from a lot of other regulation, even though we had the Housing Act go through." I want to talk about that, especially on reference to CBDC. But when you look at this Save America Act, if it does stall or cause trouble in the legislation going forward, do you think this could actually delay us past that April cliff, which everybody is pointing to, that if we don't get it done by then, the likelihood is this gets muddied because of the midterms? What do you think?
I think that analysis is very reasonable, Paul. Look, we would love to see this bill become law sooner rather than later. However, I think just from a analyst standpoint, I think that's a realistic way to look at it. There is pretty limited time on the Senate floor. There's a lot going on in the world beyond crypto, and we have the midterms starting to come up. So it's possible that Clarity Act doesn't get done this year, and it has to be something that we take up under the next Congress or some time beyond that. We hope it gets done. I think it looks like there's still a possibility, but time is getting short, and I think we need to be realistic about the odds. Now, what does that mean for crypto? The crypto industry can still move ahead, of course. There'll be a lot of rulemaking from
Yep.
the SEC, the CFTC. There's a lot of rulemaking following Genius Act and plenty more to do on stable coins and tokenized assets. Ideally, we would like all of these things written into clear law, bipartisan legislation coming from the U.S. Senate. That's best case scenario. And I do think it'll be a disappointment if clarity doesn't get done in the next month or so. But we can still move forward as an industry, and it's just something that we'll have to take up sometime later if it doesn't get done pretty soon.
Well, the SEC and the CFTC have gone on record here that they're moving forward with some of their alignment, because obviously they're regulating many of the companies that are operating in here. You look at this slowdown here in the spring and summer, what appears to be happening right now, and you believe that even if we get locked out of a clarity bill going through, this is still okay for crypto in general, especially for the institutional thesis. Because I know you guys obviously have a lot of ETFs. What does the investor think right now that you're working with? Do they like this slowdown? Do they don't care? What do you think is the status of the investor today?
Well, investors are educating themselves about the uses of blockchains. I mean, we've talked about this so many times, and you have a sophisticated audience on this show, Paul, that's pretty familiar with these ideas. But institutional investors have not spent time looking at these topics as closely as many of your listeners, and so they're
Mhm.
learning about things like stable coins and exactly what that means for the banking system. They're learning about tokenized assets and what that means for capital markets, and then how that accrues value to the underlying crypto assets, whether it's Ethereum or Solana or XRP. How do these things relate to those technological trends? That's really where the conversation is on my side with institutional allocators. They're excited about these technological trends. I think they can see that stable coins and tokenized assets are going to be a big part of the financial system. And they're trying to understand, okay, what does that mean for how I build a crypto portfolio? Which
Yeah.
tokens do I need? In what proportion? Those types of things. That's kind of where the conversation is today.
Okay, so you guys have a lot of products that are going out on Grayscale. Obviously, XRP ETF is one of those. You guys have talked about this term functional assets versus speculative assets. And if you look at what GXRP is doing in general, I think just the XRP ETFs have continued to perform very well under the guise of a market pullback, or at least it feels that way. I'm
Absolutely.
curious, with gold slowing down, the S&P seeming to top a little bit, and even with Bitcoin kind of faltering, even though as we're talking today, it's trading over 72K. Do you feel that investors are now looking into ETFs for more long-term positioning?
Absolutely. And I think the XRP ETF, our GXRP product, a good example of that. Look, we've of course had a big drawdown in crypto. I think we need to acknowledge that. Bitcoin is still well off its highs. But when you look at the last couple of weeks, I've been very pleased with how things have been trading, really kind of across the industry, even compared to some tough days in equity markets, as you're pointing out. I think that
Yeah.
is telling us that a lot of the paper hands, as we say, have been taken out of the market, and you do have more durable buyers left. And I think the ETFs are a good example of that. The XRP ETFs, the Solana ETFs have seen very good take up, and I think are building a new durable capital base for all of these assets. I think you're going to see a lot of interest down at these valuations, and I think these are pretty compelling entry points for our clients. That's the type of message that we're sending, and I think you're seeing it in the flows.
Well, yeah, if you look at the flows, I mean, we're 40 plus days right now of positive inflows. So you look at that, it's almost like a stealth accumulation is happening here. And it's intriguing because that's my point is all this is happening despite the DC noise or lack thereof, I should say, with this. What about basket strategies? I know you guys have a lot of other products and assets in there. Do you find more investors now? I know because I know personally when I invest, I do invest in a basket style strategy. What are you finding today from both institutional and more, sophisticated investors?
We are finding that people want a diversified mix of crypto assets rather than, say, just Bitcoin, just Ethereum, just XRP. They want a basket of tokens
Yeah,
typically. And they can, if they have some degree of sophistication, they can build that themselves, find the, say 3 to 7 tokens that make sense to hold together in a crypto sleeve in a diversified portfolio. That's one approach, customize it yourself. But as you say, many investors, they just want an index approach, something that automatically rebalances over time and gives you exposure to the large cap
right.
tokens in the asset class. So our product, ticker GDLC, it's called the Grayscale Coindesk Crypto 5 ETF, a bit of a mouthful, but this is top 5 tokens by market cap and a great way to get beta exposure, to get broad exposure to the crypto asset class in a single product. And that can be put on, say, a IRA or other tax advantage account, a great way to build some crypto exposure in a diversified portfolio with just a single line item. So GDLC, good solution for that. That's also seen good take up from investors recently.
Let's talk a little about the SEC and the CFTC, which seem to be on the same page now, which is ironic because we have not seen that before, at least not in my lifetime. You look at what they're doing right now. Let's paint a picture both ways. Clarity gets done. What would the SEC and the CFTC be doing next? And then if clarity doesn't get done this year, what do you think the SEC and the CFTC, what's their next major move to the market?
Yeah, that's a great question. There's a lot of elements in clarity, but the single most important one in our view is really this classification of tokens into things that are commodities or things that may
Right.
have more securities like features, and therefore the requirements of a security like disclosure and registration. And if we don't have a Clarity Act bill, a bipartisan piece of legislation coming out of the Senate, signed by the president, then the regulatory agencies are going to need to do more work on that front. What we're trying to create is an environment where companies can issue tokens as a normal course of business. Companies use stocks, they use bonds, they use convertible bonds and preferred shares, other types of instruments in order to raise capital to fund their endeavors. In our view, tokens should be a normal part of the corporate capital structure. It's another way to use blockchains, on-chain capital formation to fund innovative ideas in our economy. We want to see that happen. I think if we have clear bipartisan legislation, it will unlock open the floodgates to a greater degree than just rulemaking by agencies, because there'll be some question about how things will look in the future. So I still think we can move ahead. I still think issuance from major corporations will pick up, even with some rulemaking without legislation. But best case scenario, we get it written in bipartisan legislation so that really there's no prospects of changing it for a very long time. I think
Yeah.
that is the type of clarity that would be best case scenario for the industry.
And as far as if it does get delayed, do you think they still do those kinds of initiatives, or it
Yes.
does get delayed beyond, the midterms?
Look, I think everybody sees the need for this, including people that maybe are not all that interested in crypto. You have a large industry and asset class that's related to financial services. It
Yeah.
is very important that we have clear regulatory guidelines for how it should operate. And this is for investors, for consumers, for the financial system and the economy as a whole. We really need this stuff. And so I think that that's why there's so much bipartisan energy around it. So without this legislation, I think that need is still going to be there. Every
Okay.
observer, kind of regional observers say we need to move ahead one way or the other. We'll do the best we can without a piece of legislation in Congress.
So if let's go more on the I guess kind of positive here. If Clarity Act goes through, but yet we still see the yield provision stripped out, or in some way, maybe there's some sort of benefit around this. Do you feel like that's still a win for the industry, or is it more of a poison pill?
Look, our view would be that it's still a win, and Grayscale would like to see this legislation become law, even with some further restrictions on stablecoin yield. Now, we are not an issuer, don't offer these types of products, and so we'll let other people in the industry focus on those topics. We're pretty happy with the legislation as a whole, and I think it will help move the industry and asset class forward, and even with some things that we don't love. So our preference would be to see this bill become law. And I'll just say, Paul, one other thing on stablecoins. Look, I think stablecoins are inevitable. These are the best way for people
Yep.
around the world to hold dollars, transact in dollars. I think that they're very positive for consumers, for the functioning of our financial system, for the treasury and its need to fund deficits over time. So, in our view, stablecoins are inevitable, and we're going to work out these yield issues over time. It'd be great to have some sensible decisions in this piece of law. I think we'll get there over the coming years because consumers are going to demand it.
Yeah.
The holders of the stablecoins will really request these things getting fixed later if needed.
Yeah, for sure. Listen, I put out a tweet right here. This was called "Unmasking the FDIC Genius Act and isn't a loss for crypto. It's a moment of clarity." So this is really boiling around the FDIC deposits, thinking that those are passed through to stablecoins, while the FDIC is planning to ban these. So I put a point in here of that I don't think anybody really cares about this because we're already one-to-one verifiable versus what we see in the bank. We have no idea where our money is inside a bank. So do you think that the fact that we have continued to see stable coins climb, I'll just go over and share the coin market cap capitalization there. Obviously, you see Tether, USDC. Then you get into Ripple, USGD, PayPal, all of these moving up, including USD1. It seems as though people are continuing to grow their asset base in stable coins, regardless of this issue that we're dealing with, this pseudo FDIC cloud that circumvents or kind of hangs over this. Does this matter? Does it matter at all?
Well, it's a great question. I saw that post of yours, Paul. I'm glad that you're bringing attention to this issue because it really highlights the difference between stable coins and commercial bank money. The reason that we have to have something like FDIC insurance is that when we put a deposit into a commercial bank, some portion of that is lent out into
Yeah.
loans that could default or securities that could lose
Right.
market value. And that's why the insurance is required. Those deposits are at risk of runs without that type of thing. Stablecoins don't have the same challenge. They don't invest in risky assets. They invest in safe cash-like instruments, and so they don't have the same risk. They don't require the insurance, and so the stablecoin users, stablecoin issuers, no one is asking for FDIC insurance. It's not
Yeah.
required. That's the whole point. We can structure the financial system in a different way and lower some of the risks that we were taking today. And I think stablecoins are one way to do that. Now, not everybody agrees with that. In my view, these are a way to reduce risk in the financial system and reduce reliance on things like deposit insurance.
Well, and I think we're finding more and more people who are learning about stablecoins for the first time. You're seeing use case now starting to apply quickly. And also, I think there's the killer app of just, the transaction speed trumping what is happening within the banking ecosystem. So you see businesses now starting to fly to this. And we're seeing more companies that are now moving into this. MasterCard just announced their partnership with blockchains around the world, all built around payments. And of course, that gets into things that could affect the broader markets in general. What do you make of the MasterCard news? Because that was a pretty significant announcement.
It is significant in some ways, the ultimate endorsement. I mean, no one knows payments like MasterCard. I mean, it's a very big, sophisticated company that has repeatedly innovated over time. I think they see that the time for stable coins is now. Not surprising, great to see. I think MasterCard and Visa, some of these large payment companies, they're going to evolve as needed as the payment landscape is changing. It is changing under our feet with stablecoins at the center. I think they recognize that, are investing sensibly in this. Great to see. I think good for MasterCard shareholders.
I was looking at the block. They had an article up today talking about USDC overtaking USDT in adjusted volume. This surprised me, number one. But what it does tell me is that there's an appetite, continued to be an appetite for USDC. Some of this is happening because of what we're seeing happening in the Middle East right now, because there's a lot of money in those GCC states, countries, plus as well as Iran itself. I just wonder, do you think we're going to continue to see this kind of ramp up going into things like what Circle has done so far? What do you think is causing this?
I think some of it is institutional, Paul. When we're looking at those transaction volume numbers, they're not sliced up by payment
Yeah.
size. And I think what's probably happening is that USDC is capturing more and more of those big ticket transfers, institutional type transfers happening within the regulated US financial system. Tether, an offshore vehicle, a lot of retail payment activity, of course, a very important instrument in how the crypto financial system works. Tether itself pivoting to offer a Genius compliant US
Right.
stablecoin, I think, to compete in that type of market, and maybe leaving the traditional USDT product for offshore retail payments. That could be one way that this evolves.
Do you feel that Tether is going to be successful? If you look at the dominant position that Circle has right now, the distribution model they have with Coinbase, do you think Tether will be successful if, in terms of a genius, you
Yeah.
know, stable coin?
Probably. I mean, look, let me say Tether is one of the most successful companies of all
Yeah.
time. So I think we need to recognize that they're clearly offering a product that is in high demand around the world.
Yeah.
I think that they will compete in the U.S. market with a Genius compliant stable coin. But even more importantly, it's a big world out there. The U.S. is only maybe 20 or 25% of what's happening in the digital assets ecosystem. Emerging markets, a huge part of what crypto blockchain technology is all about, bringing financial service to those places. I think Tether will continue to be a dominant player in those markets.
I look at this whole issue around privacy, as we continue to see it manifest in a lot of different sectors out there. Vitalik has come out and kind of created this theme. I think the statement, if I can find the tweet he had, that was interesting. He says Vitalik defines the Ethereum's core mission as a sanctuary technology. So if you think about ETH as a sanctuary technology, possibly censorship resistant, we just got a CBDC kind of bill built into the housing bill where we're not going to have CBDCs in the US, fortunately, even though we already kind of had that. But my question is do you think Vitalik is prepping the world to essentially look at ETH in a different way? What is your opinion on this?
Potentially, yes. Potentially, he's trying to reframe things a bit and bring more attention to some of Ethereum's existing core properties. I don't think that he's trying to change Ethereum per se, but maybe raising the value or trying to bring more attention to the value of censorship resistant transactions and putting that into the context of other freedom technologies. I
Yeah.
do think that this is something that is sometimes underappreciated about especially Bitcoin and
Yeah.
Ethereum that are really the large, most decentralized project. They allowed us freedom to transact in a way that other technologies don't. To make a digital transaction that's just between you and me, Paul, and doesn't require the interference or can't have the interference of anybody else. I think what he's trying to do is bring some more attention to that feature of Ethereum. I think Bitcoin and Ethereum probably they have the strongest case to offering that type of transaction ability. And I think it's important. I think it's important a part of the value of both of those networks.
Zach, when you look at the corner of the market right now, crypto, of course, definitely not performing the way that we have seen it perform in the past. And many people would say, well, all right, we're setting at 2.4 trillion right now. And that's as Bitcoin edges back above 70K. Fear and greed is up, I think, 34. I'll bring it up on screen for you guys to see. But you look at this, and then you also look at gold and the S&P. We kind of touched on it slightly a little bit ago. But right now, do you feel that investors are weathering the storm as it is, or are we in a position right now where maybe they're starting to look at specific asset groups to invest in? In other words, are we finally nearing a bottom to where investors could start to deploy some capital? What do you think?
Well, it's so many different types of investors, but to use the term that you picked up on earlier, Paul, I think we are seeing institutional allocators accumulate crypto assets around these types of levels.
Yep.
Whether we're definitively at a bottom or not, of course, is subject to events.
Yeah.
The ongoing military conflict in the Middle East, the Clarity Act. There's a lot of things that could happen over the short term, but technical indicators, inflows, price performance tells me that we're at a pretty durable place for valuations in crypto, and that's absolutely what we're seeing it with our clients as institutional allocators putting capital to work in crypto at these valuations.
Yeah, I'm just looking at the ETF data right here. I'll show it. This is on the 30-day. So we've had some up days here. Slightly flows have been going on fairly well. At least this is in reference to all ETFs. If you look at Bitcoin, that has been a little bit erratic. ETH in a different kind of place right here where we started to see a little bit of acceleration here recently. Tom Lee continues to buy with BitMine. He is just, and we kind of have a thing going on with our research team that when BM&R buys their first tranche of 100,000 ETH, that is the bottom. That what do you think? Because they're obviously after 5% of the supply. What do you think about what they're doing in terms of strategy overall?
Well, look, Tom and I have similar views, I think, on the value of Ethereum, that this is an extremely important asset for the future of the financial system, and it makes sense to have as much as you can. He's doing it in one particular way.
Yeah.
Look, we offer ETFs. We think that ETFs, especially with staking, Grayscale, the only asset manager staking at scale at the moment in the Ethereum ETFs, we think that that's a great way to get efficient Ethereum exposure into lots of different types of saving and investment accounts. The digital asset treasuries like Bitmine Emergence, a little bit of a different structure, and there's other things going on. They own Ethereum, they invest in some other companies. But Tom and I definitely share the same spirit that Ethereum extremely important asset, and that one way or another investors ought to put some exposure of that into portfolios, whether it's an ETF, holding it yourself in self custody or through a digital asset treasury.
Obviously, as an ETF management for XRP, you have to look at, I think, just all the potential repricing that could be coming in, especially around XRP. You look at what's going on right now, and Brad Garlinghouse has talked about this, that he thinks the odds of passage is pretty high. However, that window seems to be closing. But he also gets into, and we've talked about this before, is kind of I think they call it's Section 205 of the Act, which would require a lot of these companies to burn or restructure how they handle their holdings to meet that 20% mature blockchain, component. Do you think that repricing would be in order for Ripple if we do get clarity through, especially around this whole Section 205?
I do, and nothing is guaranteed, of course. But look, I would say that the ETF products for XRP have been very popular. Our XRP product, these products are seeing lots of demand. And I think some investors are looking ahead to clarity and kind of asking what it means to unlock a further value in these networks. I think we would see a pricing across a range of assets, certainly including XRP. And in the specific instance of this blockchain, I do think clarifying some of the questions around the long-term supply outlook, what happens to all of those tokens, can help unlock value. If you were to, reduce the future inflation of the XRP token, I think that would have some positive effect on.
Oh, huge. Yeah. That alone, I think, starts to move things. Plus, I think it would really put some pressure on institutions to take a different viewpoint on XRP, much more serious, even though we've already seen a pretty significant amount of institutional capital that's been revealed that's investing pretty heavily, including Goldman. So that in itself is and could be one of the key milestones of what could happen with clarity. So obviously we're going to be covering that and more. Zach, always fun to have you on the show chatting about that. So thanks so much for coming on the show today. By the way, where can
It's my great pleasure.
Do you have a Twitter account? Do I follow you?
I think so. I'm Low Beta on Twitter, a bit of a silly name, right. but Low Beta, great place to find me. And then putting up research on Grayscale's website, research.grayscale.com. People want to follow along.
Yeah, you guys do a great job. We cover it quite a bit, but thanks for coming in on the show today. We appreciate it.
Thanks, Paul.
All right, you guys know what to do. I'll just bring up a quick screenshot of the petition just so everybody knows. Head out to it. We'll leave a link down there in the description. This is where we are defending the American right to earn a fair return on savings. And the goal is very simple. Once we get to 10,000 signatures, we're going to start presenting this to a lot of the Congress people in DC to let them know, hey, there's a lot of people that care about this. It's not just the companies in crypto. So you guys do that, and we will catch you next time right here on the XRP Pod. Take care.